I recently watched a video. It was put out by Tampa Bay 28 on YouTube, and it was really diving into the systemic problem in insurance in Florida. Whereas it was interviewing a person from Tampa who was considering, after receiving a renewal notice for $14,500, he was considering, going self-insured. He said, I don't want to deal with this anymore. And I completely understand that frustration. During Hurricane Ian, I had dealt with a lot of homeowners on Little Gasparilla Island where they had absolutely no insurance, no flood, no wind, and they were self-insured. Problem is, they didn't have the money in the bank to actually cover the damages because the damages were so extensive. And unfortunately, there was nothing a public adjuster like my company could do to help them out. But what's fascinating about this particular video is that it has a lot of really bad advice in it, quite honestly, and it almost encourages people to want to consider going self-insured. So in this video, we're going to take a look at it. We're going to, take a look at the different clips and really break down some of the mistakes that I'm seeing in this video and why you as a homeowner really should consider not taking a lot of this advice.
And I think your recent news report was saying that the word out on the streets is things are getting better.
I had to stop this clip right here because you notice he said the word on the street says things are getting better. I don't know what the word on the street comes from. Like who's saying that word? I know that they're talking about premiums going down, yet he's complaining about a $14,500+ premium. So the word on the street says things are getting better. That's very interesting. I think we're going to look at some more interesting and really fascinating facts once we get into this a little bit better.
And when I went back and looked at my policy invoice and listened to your words of hope, I didn't get that connection. There was a disconnect for me.
Is that scary for you?
It is.
But now he is taking the biggest risk of all.
There it is.
There it is. Total amount due?
$14,523.
Deciding after getting his 2026 renewal at more than $14,500.
Right on top. Look at that. Notice of lapse effective.
To drop homeowners insurance altogether.
The policy will not provide any protection beyond the lapse, effective date, and time specified above.
That's scary.
Yeah.
This wasn't something you wanted to do.
No, and I mean, it wasn't something I wanted to do last year, which is why I kept my policy with Manatee.
But when it went up another 4,000.
4 or 5,000, yeah. It was time to, what do they say, fish or cut bait?
And since he paid off his 1913 bungalow in Tampa Heights in 2022, he's no longer required to have it.
It was kind of like accepting the inevitable.
Okay, so there's a couple of things here worth noting. Number one, he got a premium renewal notice in 2026. That's this year for $14,523. Did you see the size of that house? I mean, that thing was what, 1,400 square foot? They called it a bungalow. So that's the first thing that, the prior clip said, the word on the street is things are getting better. And then the next thing we see is him opening up a renewal notice in 2026 that says $14,523. And what's crazy is he mentioned the fact that it went up $4,000 or $5,000. So that means his policy last year was somewhere in the neighborhood of $9,000 or $10,000. And it jumped dramatically. So if you go from 10,000 to 15,000, that's what, a third of the entire premium going up in price. And yet they say insurance companies are becoming solvent. They're getting better. Citizens has reduced its size dramatically. New insurance companies are coming in. And we have the serious dilemma of when you get this renewal notice at $15,000, what do I fucking do, right? I mean, that's insane. So I completely sympathize with the frustrations, but here's the problem. He's considering going self-insured. And again, we're going to get into it a little bit further in this video, but I think going self-insured is a really bad idea in the state of Florida. So you'll notice in that segment, he said, or actually Tampa Bay said that he paid off his mortgage in 2022. So that really raises interesting questions, right? I don't have a mortgage requirement to have insurance, therefore I can self-insure. But can you really? I mean, think about it. If just because you paid your mortgage off in 2022, it was probably a 30-year mortgage. And he probably worked very hard for 30 years to get to that point where he could pay it off. So if he drops his insurance and we have another catastrophic event in this town, in the city of Tampa, like we did in 2024 with Helene and Milton, he's going to be in a world of hurt, absolute world of hurt. So what I'm interested to hear is what their advice is moving forward, because I think further down the video, they interview an agent, and the agent gives some incredible advice that I just want everybody to see.
I think the overall consumer sentiment is they're tired of insurance, right?
Insurance agent Jay Colehouse.
It's really expensive, and there's, a lack of coverage on there, and it's just been years of rate increases without, having a payout, really can wear a consumer down.
Despite understanding Floridians are tired of paying high insurance, Colehouse says homeowners have options before dropping insurance altogether. The first, just get liability coverage.
The minimum we recommend to somebody, hey, at least take some liability coverage.
What does that include? Just like fire and break-in kind of?
So that would really be slip and fall coverage.
Option 2, drop your wind or hurricane coverage.
So now you exclude wind. It covers you for a kitchen fire, a pipe break, a break-in, anything along those lines.
Okay, so here Tampa Bay reached out to an agent, right? So an agent is someone who sells you insurance policies in Florida to have coverage for your home. And a lot of agents will be captive, so they will work for one specific insurance company, like State Farm, for example. And other agents would be not captive, where they can work for multiple, different carriers, and they can offer their premiums at competitive rates. So what's interesting really in this particular segment is that this particular agent confirmed that we've had years and years of continuous rate increases without a payout. Okay, think about what he just said there. He acknowledged that there's years of increased premiums that has caused financial stress to Florida homeowners without payouts. And then acknowledging that, he offers an alternative, right, to being self-insured. And here's the alternatives he is talking about. He starts off with, well, if you don't want to carry any insurance on your house, at least carry liability insurance, because, if someone in Tampa is walking down the sidewalk and they step onto your property and they slip and fall, that liability insurance is in place to protect you. That is the most basic minimum coverage of any kind of homeowners coverage you could possibly have. And it's almost useless in a state like Florida. Okay, we have massive wind events all the time. They're not always a named storm. We have wind gusts that exceed 60 miles, 70 miles per hour. We have microbursts. So liability insurance is completely useless for that. So if you have trees that fall on your roof after a wind event, if you have shingles that have been lifted up or removed, even if it's just a few, liability insurance doesn't cover that. The second thing that he says is drop your wind, because then you still have coverage in case of pipe breaks. And, I understand that as well too, right? So wind coverage is going to be something that makes that premium go up quite a bit. And unfortunately, in a state like Florida, I think it's absolutely mandatory. I would do the opposite, but you can't. If I could, I would recommend that they write the policy so that you could have wind-only coverage and drop all the rest of your normal covered perils. Okay, so that in the event that you have a toilet overflow, or that you have a pipe break or a dishwasher that malfunctions, any of these type of events, then you're not going to have coverage for that. You'll have coverage for the wind event instead. Well, here's the thing. Yes, we do deal with a lot of pipe breaks and really crappy construction in Florida that results in a claim, but it's not nearly as devastating to a homeowner than a hurricane. A hurricane can absolutely do tens of hundreds of thousands of dollars worth of damage instantly in 24 hours, displace thousands of people, and create absolute chaos in the local community. Whereas a pipe break, you're generally going to wake up and find water on the floor. You're going to turn off the water at the main. You're going to call a plumber. You're going to investigate where that water's coming from. You're going to try to fix where it originated from. If it's a plumbing pipe, then the plumber will replace the area that broke or ruptured or bad fitting. And then, from there, you got to clean up the mess and do some restoration work to get you back to pre-loss condition. Generally speaking, that can be very difficult for a homeowner, but it's generally not going to completely devastate your life. You can recover from that a lot easier, even if you don't have a kitchen to eat from. It's an inconvenience. Your children may be inconvenienced. But you can recover from that even over time. But unfortunately, the way policies are written, they want to have you drop, the roofing section of it, the wind section of it, because that's where a lot of claims come in. It comes in from roof damage and wind events in Florida. So in my opinion, that advice that the adjuster gave, or I'm sorry, the agent gave, was to try to maintain a relationship with policyholders, even if it's in a very minimum capacity, so that they can maintain their book of business. But this video gets better as we go along, so I can't wait to see the next segment.
Option 3, make improvements to your home. A better roof, hurricane clips, and shutters can all drop your rates.
Hey, if I spend $15,000 on a roof and my rate drops from $14,000 to $4,000, now my roof pays for itself in 18 months and I get to keep insurance coverage on my house.
Options, Slake now has 45 to 60 days to decide on, because Jake warns once there is a true lapse in your policy, it's very hard to get insurance again.
Most carriers require prior coverage within 45 or 60 days. And the reason is that way people don't drop insurance November 30th at the end of hurricane season and then go to buy new insurance June 1st.
I had to stop it right here again. Option 3, to make improvements on your home. So you want to reduce your policy. They want you to make improvements on your home. What does that really mean? Well, in Florida, premiums have been written, or policies have been written lately, to really examine the lifespan of a roof. And I agree, as a general contractor for over 25 years, that the severe weather and heat in Florida does impact the lifespan of a roof. But now Florida insurers, they really want the roof to be within 10 years old. 10 years. Most roofs that I installed back when I was a general contractor, and I was doing a lot of roofs per year, they were laminated shingles, architectural shingles. It's the same thing. They were generally a limited lifetime warranty, and they generally were warranted for 50 years. So what this agent is suggesting is, let's talk about it. Option 1, right? Drop coverages and keep liability only in case someone slips on a banana on your property and wants to sue you and take your home away. That is a really good insurance policy, but how often do we see that in claims? Not very often at all. Option 2 is to drop your wind insurance and maintain the rest of the policy so that you don't have a wind deductible, a hurricane deductible, which is usually substantial, by the way. So that's a benefit. But also where you get impacted by this move is that when you don't have wind coverage and we get a windstorm, you have no options but to come out of pocket. And financially coming out of pocket for a new roof is a lot more expensive than a small kitchen fire, generally speaking, or a pipe break inside your house. Roofs can be very, very expensive in Florida. If you have a tile roof, a metal roof, architectural shingle roof. And then, thirdly, like the roof in this story on that bungalow, it doesn't look that old. So people are replacing their roofs every 10 to 15 years as it is, and they're putting on supposedly warranted roofs that have, for 50 years or lifetime limited warranties. Depends if you go with Owens Corning, GAF, Certainteed. They all offer similar warranties as long as you use their complete system. And then it needs to be installed properly, obviously. So what he's suggesting is, hey, if you just update everything in your house and spend, maybe $50,000, we can lower your premium, and bring it back to what, normal? What is normal? We don't even know what normal is. For him, $10,000 was normal in 2025. His new normal has become $15,000. So you're saying that if he dumps 20,000 into the roof, or repaints this outside, replaces all his windows, upgrades his electrical systems, upgrade the plumbing systems, that he's going to save $5,000 a year in premiums over the next how many years so that he can recover that money in order for the insurance company to save money. This is the insanity that I'm talking about and we're fighting against, and we want to educate everybody who is dealing with higher premiums and they don't understand what's going on. So let's continue watching these segments and get into it even further. But so far, the advice has been, as a recap, drop your wind, only carry liability, or dump a ton of money into your house, and hopefully the carrier and the underwriting department will recognize that money you put in there and give you a substantial decrease in your insurance. Okay.
Yes, I'm not done looking. And as I mentioned to you before, there may be other options for me at this time in my life that don't necessitate me continuing to live in Florida or Tampa.
So truly, I mean, you're looking at being priced out of paradise here
Could be.
because of insurance.
And I'm not the only one in this boat. A lot of people are being priced out of paradise.
Covering insurance for you in Tampa, I'm anchor Nadine Yanis.
It's really sad. If you listen to what he said, we're being priced out of paradise here. The house is a 1913 bungalow in Tampa. He paid it off in 2022, which means he probably had a 30-year mortgage on it, which means he probably has been here for a very long time. It sounds like he's been a pillar of the community. And he gets his $14,523 premium for 2026. And now he's like, I can't afford this, because premiums need to be paid pretty much up front. There's not a payment plan for premiums that I know of. Now, I could be wrong on that, but for the most part, all the policies I see have all their premiums paid prior to inception, which is a lot of money out of pocket, $14,523. I wonder how many more people have a 1,500 square foot home or less in Florida, and you're paying, what's that, $1,000 a square foot almost? I mean, 1,400 square feet. It's a lot of money. It's just ridiculous. It's a third of a average income. If you make, $45,000-$50,000 a year. We do have a real issue in Florida, and this guy was talking about a solution of, I got to find another insurance company. I'm looking for lower premiums. We're not done looking. That's what he said. He said, we're not done looking. And then he finishes off with, we may have to sell and just leave Florida. So will we see a massive exodus in the next few years if insurance carriers who are claiming solvency, who are claiming that they're recovering, who are claiming that they're coming back to Florida. If we continue to see these massive premium increases without the payouts, and what does that mean without the payouts? So this is what I think it means. I think that in the very beginning of the video, when they were talking about, without payout, rise in premiums without payout, I think that's for the people who consistently have paid premiums and then had to file a claim and didn't get the indemnification that they needed to bring them back to pre-loss condition. That's what I think that meant. What do you think it meant? I would love to hear what you have to say in the comments about this. I appreciate you watching. We are just trying to educate homeowners about their insurance policy, about their options, whether they're good options or bad options. I'm going to give you my opinion. I really appreciate Tampa 28 for doing this story. I think it's important, and I hope they do more stories on this, and I hope they follow up. But overall, as far as advice goes, I think that's really bad advice. But, what does that leave him with? Well, we got Citizens. Not really, because he was insured by somebody else. And Citizens is generally a last resort insurance company, and their premiums are generally even higher than everybody else's premiums. So that's not a good option. So he's got to really shop around for a very specific policy that's going to give him some wind coverage in case he has a wind event, give him some interior coverage in case he has a pipe break or something to that effect. And then also, maintain some liability as well. Those three things are important. I put liability at the bottom because it's the least likely thing to probably happen. Not to say it won't, but it is least likely to happen. We see, toilet overflows, pipe breaks, kitchen fires, candle lights up a curtain or something to that effect, accidentally. So these are all accidental minor things that we see more than we see liability. Hurricane, wind, tropical storms, we see a lot. It's Florida. We get winds that come from the east, that come from Africa, that come from the Caribbeans, that form right here in the Gulf, like we did a few weeks ago, that turned into subtropical storm Bertha. It really didn't do too much. It went west and fizzled out. But imagine if that sat over St. Pete while he decided to cancel his premium. Let's imagine that he canceled it. He said, "I'm not paying this. Just drop me." And then a month later, Bertha, instead of going west, decided to hook back in, sit on top of Tampa, and create all kinds of havoc in his life. And it doesn't have to rip the roof off to create that kind of chaos. All it needs to do is create storm-created openings and allow water intrusion into your home, and your life is affected deeply at that moment, right then and there. So anybody watching this video, please consider what we talked about. And when you're sitting down with your agent, push back. Like, if it doesn't make sense, or if it doesn't sound right, or if it seems like it's going to leave you exposed, push back, ask questions, look for more alternatives. Don't let their job be so easy. They're there to sell you a policy. They don't know your home life. They don't know your circumstances. They don't know your financial circumstances. They don't know what your needs are unless you tell them, and unless you have those honest, transparent conversations. So this is Scott Harris with the NAPAICC Insider. I thought this might be an interesting video for everybody to look at. I really appreciate everybody taking the time out. I know this was a long video, and if you liked it, please like it. If you think it's important and you know people that have been impacted or are considering dropping their homeowners insurance in Florida, please share this video with them, because I think it could be absolutely useful. I don't have an answer for you as far as what do you do when you get a premium that's, $15,000, and you can't afford it. I don't have that answer, but I can tell you that we need to find those answers, because the answer is not going self-insured. I've worked hundreds of hurricane claims. I've seen what happens to homeowners that have gone, self-insured. Generally speaking, you need to have enough money in interest-bearing savings account that equals the value of your house on the reconstruction side, not the land value, but if your house was a total loss, do you have enough to build a new home? And that's different from market value, by the way. That's construction costs. So what you should do after watching this video is take a look at your own premiums, decide whether they are becoming out of control or not. And then from there, talk to your agent and have good conversations and address these, these problems in your own premium before they need to be addressed. And you need someone like me to help navigate through the process. And the process is difficult for everybody, even for me. So with that being said, thank you very much. I hope everybody had an enjoyable time watching this video, and I hope it was useful. I hope the information was good, and I look forward to seeing you on the next time.